This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices higher this morning. This due to merger and acquisition news. Also, over the last couple of days, we have seen a lot of the sell stops taken out under some key support areas. So I think the technicians now have turned a bit bearish, maybe too bearish given these lower prices. So from here, I think we can probably do better in stock index futures, especially with earnings coming in better than expected. Over in the foreign currencies, we are seeing the euro currency trading higher. We had the European Central Bank maintaining their key interest rate at a record low 25 basis points, but it was the statement that helped the euro currency to advance, basically offering no strong hints of any further accommodation from the European Central Bank. So that very supportive to the euro currency. Also, we had the Bank of England maintaining their monetary policies unchanged as expected. Their key rate remains at 50 basis points. Also, we have the sell stops, I think, for the most part taken out in the pound over the last 3 or 4 days. With that in mind, I think we can see futures recovering. So look for higher prices today and longer term for the British pound. Over in the Canadian dollar, some pressure there. The Bank of Canada has maintained an easier bias to their monetary policy, which has been rather negative toward the Canadian dollar. So we would expect lower prices for the Canadian. The Australian trading better. We had some improved trade data out of Australia. So I think I'd stand aside for now. Possibly the Australian dollar could be a sell over 90 cents if we do get to that level. And interest rate markets, we feel that most of the economic reports will start to come in a bit on the weak side. I think this is largely due to the Fed's tapering of QE, and I think that as the economy slows, at least as far as the growth rate is concerned, there will be more pressure on the Fed to halt the taper later this year, and that would be supportive to treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.